Francisco Blanch is head of commodities and derivatives research at Bank of America Securities. Francisco, it's great to have you back on the program. How do you see this Russia story playing out? And are you surprised that oil's not moving more, given that Ukrainian drones hit pretty deep inside Russia?
Hey, Brian, thanks for having me. Look, we've had, of course, hits to Ukrainian refineries, but also, Russian refineries by Ukrainian drones. But also, we had the port of Primorsk, which was hit a couple of weeks ago. Exports about 1 million barrels a day. It started coming back again today. So we are in the midst of this constant warfare where energy infrastructure assets are being targeted. And that's, of course, a challenge for the market. Very different from what we saw during the Biden administration, where there was a lot of concern about the potential hit to Russian energy assets and the impact on prices. So you might ask, so why isn't, as you said, why isn't the price reacting more now? Well, the reality is OPEC agreed to bring another 1.6 million barrels a day of capacity back into the market, having agreed to bring online 2.5 million barrels a day in the last 6 months. So there's a lot of OPEC plus barrels coming in the market as this attacks go on.
And we assume and we believe that Saudi Arabia and maybe some other OPEC nations, but really the Saudis, have enough spare capacity that if there was a meaningful offline of certain Russian barrels, maybe Ukraine hits them a little bit harder, that Saudi Arabia and some others could fill any gap that may be in the market?
Well, I think if you're looking at a relatively small hits, the answer is probably yes. And in fact, there's reports that within Russia, there's been some shortages of petroleum fuels like gasoline, because, of course, as you hit Russian refineries, like the one that was hit over the weekend, again, that was about 7% of Russian refining capacity went offline. So, they are already in a tense internal market. So some of these measures are denting away, or some of these attacks are denting away Russia's ability to fuel its own domestic market, the international markets. And yes, I mean, remember, we've been in a surplus in the first 8 months of the year or so, with the majority of oil, of the surplus oil, going to Chinese storage. So the Chinese are also buying on their end, getting ready for what may happen in the future.
Yeah, and you've got a couple of macro trends, Francisco. You're a big thinker, and I love that about you. And you talk about how energy demand is going to grow, electricity demand is going to grow. We know that. We've talked about it. But who are the winners? Who ultimately wins from the world's sort of unlimited thirst for more power?
Well, look, I think it's very clear that at this point you need an all-out energy strategy. The demand from data centers for artificial intelligence and other new sources, as well as electric vehicles and the electrification of homes, is enormous. It's already hitting markets like Texas, where we've seen dramatic power demand growth. I mean, 5% plus year on year. I mean, you don't even see that in emerging markets, Brian. It's incredible the amount of demand we've seen. So you really need to have all sources of energy available at the moment to meet this great demand. And remember, Google today hit, or Alphabet hit $3 trillion. That's because the market expects these companies to generate a lot of profits, and to do so, they need a lot of power. So I think you need a policy that's very encompassing. We're seeing that in different countries. But I have to say, the Chinese seem to be a little better prepared than other regions. They're investing very heavily in their grid infrastructure, upgrading it quickly, but also accumulating vast amounts of thermal fuel storage combined with renewable fuel setups in solar and wind. So they're really going all out here.
Yeah, and I pressed the Secretary of Energy and Secretary of Interior last week in Italy at a conference about wind, and saying we're going to need all the energy in the world. Is it smart to go offshore wind when you can hate it, but we still need it? What do you think? Is there a future for things like offshore wind?
I think there is, and offshore wind is probably the more expensive sources of renewable energy. The cheaper being onshore wind, of course, but also solar, and I think battery technology is picking up very strongly. Now here again, the Chinese have invested enormous amounts of money in their own domestic industrial capabilities. So they're positioned in a very strong position to meet that incremental energy demand. I think even to some extent, Europe looks okay because there's been so much demand destruction in the European continent as a result of the crisis 3 years ago that you have spare capacity. So and look, I mean, some U.S. energy exporters will be big winners as well.